Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We had the Dow Industrials up 30, NASDAQ up 29, S&P's up 5.5. None of the indices could hold price, folks. You have light volume. You're building a B to C of an ABC structure on the way down. That's the way this seems to be setting up. Gold contract down 850, couldn't hold price either. 1260.40. Bottom line, we'll see whether gold can catch a bid. It hasn't. If we go over to that gold contract, we take a look at that gold contract right now. What you're going to see. Bring this baby up. What you're going to see here is that we go back a couple months. Bottom line, April 17th, gold was $13.75. You're 115 bucks under it right now. That being said, the GDX, these equities are still holding up. It's pretty amazing, actually. The GDX right now is 21.95, and we actually look at the same structure. It was only 23.30. What the GDX did do out here today, it rejected lower price, had lighter volume. Bottom line, still wants higher price. Pretty amazing, actually. Silver held up. Has continued to hold up. Silver contract trading down 3 cents, $16.29 an ounce. Light sweet crude, this is the number, man. This thing took off like a rocket ship. And this was after the Saudis came out and said, yeah, they're going to make up lots of oil for the other producers that can't do it. But guess what? The market up 3.5%, big number, has wide price spread, had volume behind the move. You're up by $2.38. You know, bottom line looks like it's going after the highs again, $72.70. Notes and bonds flat. Notes and bonds continue to want higher price. You had the 10-year close at 120, flat, 30-year flat at 144.10. If we look at the yield on the 10-year right now is 2.877. Last 3 months, the low is 2.7, the high is 3.1. King dollar, bottom line, caught a bid coming into the close. Excuse me, folks. King dollar closed out up 451 ticks. You're trading 94.390, and the low of the high is 94.340. So what that sets up, folks, is that once you get into that bar, bottom line, we'll see whether it can handle the top of that bar, which is 95.220. Some of the higher volume equities out here in this market today. GE was the highest volume. That was up 99 cents, trading $13.74. They're getting rid of a couple of their divisions. This was the first day that GE was out of the Dow Industrials also. Bank of America was up 6 cents. We had Intel down 104. If we go take a look at Intel, this is serious business. You know, we had a little bounce out here today. Intel is already down off its highs. They've been down about 2 weeks in a row. 57 to 49, saying quite a bit that Intel today couldn't even hold price. That's, you know, you're already down quite a bit. Bottom line, it's showing weakness. Ford Motor Company was flat, trading 11.52. You had Microsoft up 69 cents. Apple was up 2.20. We had Citigroup up 56 cents. AK Steel was flat. You had Facebook up 2.65. We get over and we take a look at, let's go to Amazon, some of the king dogs out here. Amazon, that was up $27. We did 4 million shares. You're down on 7 yesterday. It's not the end of the world. It's not as anemic as some others. Google, let's go take a look at Google out here. Yeah, Google's in trouble. So check this out. Google's a classic too. Google is trading in a consolidation. The high of the consolidation is 1186. The low of the consolidation is 980. It had failed on price, failed on volume on the 20th of June, last week, at the highs. Comes down with volume. Couldn't hold price today. Got to a price point of 1133. Ended up closing down 6 at 1118. This thing's going to go after its lowest swing points. Both Avis and Hertz today got toasted and roasted in a huge way. Avis was down 10%. 373. Blew away its high volume swing low from February. And let's see. Yeah, on the daily, it's not good. It actually blew away the price, but the volume it was 3.9 versus 5.5. That being said, you put this on a weekly, and oh, look at this on a weekly. Oh, look at this. It's a monster ABC down. Okay, so here we go. 7.4 million. Yeah, it's in monster ABC down. Okay, so your 8-point on this is $50 in ballpark, and that. The B is 37, so we're talking $13. Your C is 43, $30. $30, here we come. And $31 is the swing low from the 17th, the week of the 17th of November of 2017. Hertz is in worse shape than Avis. Hertz was down $2.23. That's down about 15% today. Huge number. We take a look at Hertz. You set Hertz up. This has been a mess for a long period of time. Hertz is down from $125, I believe. Yeah, 125. It was 125 4 years ago. Hertz is going to go after the swing low again of $8.52. That's pretty intense, man. And what both of those were about today, I believe, was that they, last week, they were saying that the used car market is big. This week, they're saying dimming views of used car prices are weighing down shares of Hertz as well as Avis. Bottom line is that what's weighing down on both car companies, folks, and both rental car companies, is the aspect that we have Uber and you have Lyft. Bottom line, you can imagine just the amount of money that they lose just on that, okay? Because the bottom line is that airports right now, they're set up. Most airports are set up for Uber and Lyft. And guess what? Bottom line, they're much less expensive, particularly in cities, going into the city and parking. Sonic Corporation, okay, this is drive-in restaurants. That closed at $35.63. That right now is trading at $33. They just come out with numbers, and their same-store sales were down basically 0.2%. Stay right there, folks. Come right back.